Do you think that there is risk here to Fed credibility if and when the Fed does cut rates?
Well, that's always the concern, because the Fed has been designed to be insulated from political pressure, and the more that pressure comes to bear, it begins to create sort of a cloud over their decision making for the public. I think that is not true for the individuals around the table. They are quite focused on their responsibilities to the American public. But of course, the communication that runs into this issue can become more difficult.
President George, were you expecting to hear a little bit more, perhaps, from Jerome Powell in defense of central bank independence, given that this is, in essence, his valedictory speech at Jackson Hole?
Yeah, I wasn't surprised. I mean, I'm not sure what could be said at this point that hasn't already been said. And he has been very clear that he is focused on the job that was given to this committee. So talking about the economy, talking about the framework, which describes how the Fed goes about its business, I think was his way of saying we are sticking to the business at hand. And I think that was appropriate for him.
Well, let's pick up on that framework and what we learned today, because I do want to ask you about inflation concerns, because the Monetary Policy Framework Review was revised to emphasize maintaining 2% inflation expectations. But what can the Fed do if you were advising here to keep consumer expectations well anchored when we really haven't seen them deliver on that 2% target in recent memory?
Yeah, I think it's a pretty big issue right now for the Federal Reserve. And of course, you heard the chairman characterize the upside risk to inflation that exists. You heard his emphasis in the framework review that having well-anchored long-run inflation expectations would be critical for this committee to do its work. And so right now, depending on where you are looking for evidence of the anchoring of those inflation expectations, I think you have consumers feeling one way. You have businesses beginning to think about how the inflation pressures that lie ahead might be affecting them. And so I think it creates a tentative environment, if you will, about what the public expects inflation to be down the road. And that, of course, is going to be, I think, one of this committee's biggest challenges ahead, is that you have an inflation dynamic right now where inflation was already running well above the Fed's stated target, their definition of price stability. Now you have the tariff effects, which, again, the committee might be willing to look through, but it becomes pretty difficult to disentangle where some of those effects are coming from. So it is a time, I think, of really having to lean into where are the risks around this monetary policy.
President George, I wanted to dial into that question of tariffs and their impact on prices. And today, during his remarks, Jerome Powell did indicate that he saw it more as a fleeting impact on inflation rather than something that would be persistent. But he did not rule out the latter scenario entirely. What is your view about the risk down the road, especially given that the administration isn't done with the imposition of tariffs?
I think that's why this question becomes so difficult to answer. Because if tariffs were coming in one discrete move in a very precise amount, then you might feel more comfortable saying this is a one-time hit to the price level and we can look through that. But the truth is you now have inflation that is reacting to how these tariffs are being carried out. They're being carried out with a fair amount of discretion by country. Companies will be responding to those in different ways. And that's why I think it is going to be more difficult and, frankly, more challenging as the committee tries to keep its credibility, tries to keep that inflation expectation anchored, to know what is driving the impact of inflation here. So it just creates a lot of uncertainty, and I think you heard that today in the chairman's speech. This is being conducted in the context of significant uncertainty.
Significant uncertainty, and we also heard Fed Chair Jerome Powell talk about the idea of how tightening immigration policy is impacting the labor market. And I'm curious what you think about this idea as firms try to absorb some of the excess costs when it comes to tariffs and passing that on to consumers. Are they also going to be perhaps faced with some higher labor costs here, too, as we watch more of the administration's policies play out?
So I think this is also a very open question. The dynamics between these two are going to be worth watching, because you'll be watching for the wage impact as we see price effects come into play, and companies will have to make decisions here about whether their ability to pass on cost, to pay workers, all of that mix is going to be very important in how the Fed judges what its next steps are going forward. So yes, those two are very tightly linked, I think, when it comes to trying to decipher the economy. And you heard the chairman say today, the labor market is reacting to both supply and demand factors right now, which make, and I think he used the word, a curious mix to come up with the current unemployment rate. So it is a time of uncertainty, and understanding the dynamics that are affecting both the price inflation as well as labor rates is going to be an important one for them to decipher.